Stop what you're doing right now. Close every other tab. Put down your phone. What just happened in the markets today is the kind of event that separates people who build wealth from people who destroy years of careful positioning in a single afternoon of panic. Today is Friday, January 30th, 2026, and over the last few hours we witnessed something that hasn't happened since the depths of 2020. Everything sold off at the same time, in the same direction, with the same violence. Silver crashed from $120 per ounce to $106, a 12% plunge in a matter of hours. Gold collapsed from $5,600 to around $5,100. Bitcoin broke through $85,000 and kept falling to $84,000. S&P futures dropped over 1%. The Nasdaq was hit more than 2%. Over $800 million in crypto long positions were liquidated in minutes, not hours. This was not a normal pullback. This was not a healthy correction. This was a liquidity bloodbath, a margin call cascade, a forced deleveraging event hitting every crowded trade at once. Right now, millions of investors are staring at their screens in shock. They're wondering what just happened. They're questioning everything they believed. They're asking whether precious metals failed, whether they should sell, buy, or just close their eyes and pray. This is where bad decisions are born. Let me help you make sense of this. I'll explain what triggered the crash, why silver was hit so hard, and what actually matters in the next 24 to 48 hours. At 9:30 Eastern, when the U.S. cash market opened, everything changed. Oil was up 3% and climbing. The dollar index was firming. S&P futures were sliding. Gold was getting hit. Silver was getting hit harder. Bitcoin, which trades 24 hours a day, was rolling over in large chunks. The kind of selling that tells you price doesn't matter anymore. Trading screens looked like someone spilled red paint across every asset class. Oil up, dollar up, everything else down, stocks down, crypto down, gold down, silver down, mining stocks getting demolished. Here's the part that should terrify you and comfort you at the same time. Nothing in the fundamentals changed. Nothing broke. There was no central bank shock, no declaration of war, no silver-specific disaster. What happened was mechanical. This was liquidity. This was the market selling first and explaining later. When every asset sells together, people search for a narrative. They want a headline that makes the chaos feel logical. Social media filled with theories. Iran, secret Fed moves, the AI bubble popping. Most of it missed the point. The real driver was simpler. This was a deleveraging event, a forced liquidation cascade. The market stopped caring about fundamentals and cared about one thing only: cash. Silver had gained 68% in a month. Gold was up nearly 30% year to date. Bitcoin and tech were extended. Everyone was positioned the same way. Long risk, long momentum, long metals. When everyone leans the same way, the market becomes fragile. It only takes one push. That push came from Microsoft. Yes, Microsoft. Earnings technically beat expectations, but Azure growth slowed. In a perfection-priced market, that was enough. Microsoft dropped nearly 12%. $250 billion in market cap vanished in minutes. That crack rippled through tech. Oracle fell. Nvidia dropped. The AI narrative suddenly looked vulnerable. Silver got hit because it's not just a precious metal. It's an industrial metal tied to AI infrastructure. When tech sells, equities weaken. When equities weaken, risk appetite collapses. Traders sell what they can, not what they want. Liquid assets become ATMs. Gold is liquid. Silver is liquid. They get sold first to meet margin calls. That's how the cascade formed. Tech weakness triggered equity selling. Equity selling triggered risk-off behavior. Risk-off triggered selling across everything else. Crypto liquidations exploded. Precious metals sold off. Crowded trades unwound violently. Deleveraging doesn't discriminate. It just destroys leverage wherever it finds it. Analysts warned volatility would feed on itself as liquidity thinned. Market makers pulled back. Banks don't have infinite balance sheets. As volatility rises, they reduce risk. That's how markets shift from ticks to chunks: fast, violent, unforgiving. Silver felt this most. After hitting all-time highs above $120, it fell nearly $14 in hours. Mining stocks fell even harder. That's normal. Operational leverage cuts both ways. Despite the price action, nothing fundamental changed. China's demand remains massive. Export restrictions are still in place. Industrial demand continues to grow. The multi-year supply deficit remains unresolved. What changed was positioning, not reality. Oil added another layer of stress. While everything crashed, oil surged to 6-month highs. Geopolitical fear around Iran and the Strait of Hormuz drove inflation worries. Higher oil pressures consumers, equities, and central banks all at once. This toxic mix produced today's collapse. Tech weakness, dollar strength, rising oil, gold lost trillions in implied value. Silver underperformed as it does in risk-off events. Miners fell more than the metals. Again, normal behavior during stress. Now comes the real question. Is this a flush or something worse? The truth is, nobody knows. Anyone claiming certainty is lying. What matters is behavior. Does silver stabilize or keep grinding lower? Does the dollar keep strengthening or roll over? Does oil keep rising? Do miners lead any bounce or continue to lag? Emotionally, this is the most dangerous moment. Fear, regret, reverse FOMO. That's why the framework matters. Don't act immediately. Review your thesis, not your P&L. Fundamentals didn't change today. Check your position sizing. If this move broke you, size was too large. Define what would change your mind before emotions take over. Preserve dry powder. Don't try to catch the first knife. Silver holding above $100 keeps the bull case alive. Below that, deeper support matters. Above $115 and $120 would signal today was a shakeout. Gold selling today doesn't kill the safe haven thesis. Early panics sell liquidity first. Short-term chaos and long-term fundamentals often diverge. Days like today test conviction. Real wealth isn't built by avoiding volatility. It's built by surviving it without abandoning your process. Silver at $106 isn't silver at zero. It's still far above last year. One liquidation day doesn't kill a multi-year thesis, but panic selling can remove you right before the next opportunity. The market tested everyone today. The lesson is, what matters now? Stay calm, stay disciplined, stay positioned. Tomorrow is another day, and those still in the game will have another chance.